If you're looking for a day trading strategy, this video is for you. Here's a price action strategy that I've developed over the months. It uses only 4 indicators, 2 of which are optional, all are free. We're going to do a realistic backtesting of it and see how well it performs. This is a day trading channel that does realistic backtesting on strategies to see if they're profitable. What does realistic backtesting mean? It means that on this channel, we're not going to assume that the trader is able to sit in front of the screen all day like what other channels of this type do. Here, we will pick a session and even narrow it down to just a few hours. In this video, we're going to look at currency pairs, but there will be another video that we're going to test this strategy on with other instruments, cryptos, futures, stocks. We're going to be using the TradingView platform. I have the premium plan, but you can use this strategy on the free plan also. I believe the free plan allows 3 indicators per chart. This strategy uses 2 indicators and 2 optional indicators, so it will work with the free plan. Let's begin by applying the strategy to the GU, the pound dollar. We're going to use a 5-minute time frame, which is a great time frame to use for day trading. The first indicator is optional. This indicator is a trading session indicator. It will tell you the hours we will be trading. That's why I say it's optional, since you can just look at your clock and determine the trading hours. And you can also add vertical lines to your chart that tell you where you will be trading. To apply the trading session indicator, click the indicator button and search for trading session. Again, this one is optional if you're on the free version. You can try these other ones, but I just picked the first one. Before we adjust this indicator to our trading hours, let's figure out what those hours are. For that, we need to go to forexfactory.com. That's forexfactory.com. Scroll down to the bottom and you will see sessions. This area that overlaps the London and New York sessions are the hours we will trade. So that means from 8 a.m. to 12 p.m., these 4 hours. It should already be adjusted to your local time zone, but if it's not, we will trade this strategy during the London-New York overlap. We're trading 4 hours a day. Now let's go back to the chart. Hover over the name of the trading session indicator and click on the settings symbol. This indicator will highlight the area that you set. We're going to do the opposite and highlight the area that we're not trading. Change the first number to 12 p.m. Change this second number to 8 a.m. Now the area that we're not trading is in red. The second indicator is the daily open line. Click Indicators and search for Open Daily. Pick this one called Open Close Daily Line. Go to Inputs and uncheck Previous Closing Daily Line. This one is also optional if you are limited to the number of indicators you can have. If you are on the free version, instead of using this indicator, you can plot a horizontal line at the open candle of the day. Go to trend line, change it to horizontal ray, but since we'll use the indicator, we don't need the manual one, so let's delete it. The final two indicators are not optional. The first of those is an EMA, exponential moving average. Click on indicators again and type EMA. Click on the first one. Click on settings for the EMA and increase the length to 12. Choose style and change the color to orange and make the line thicker. The last indicator to apply is the Donchian channel. Again, indicators, type Donchian and choose the first one. Click on settings, uncheck the basis, go to inputs, change the length to 60 and click OK. The Donchian channel shows the past highs and lows of candles going back a number of periods. There are several different ways to trade using the Donchian channel, but we're not going to use any of them. We're doing something different here. Considering the indicators, let's give this strategy a name. We're going to call it the DC Open for Donchian channel and the open line. Now for the strategy. With this strategy, you're not going to get a lot of trades, maybe 1 to 3 trades per session over several currency pairs. I have 8 pairs on the screen at once, and I average about 2 trades per day. The first thing to look for is which side of the channel is the price bouncing off of, the top or bottom. If it's bouncing off the top, we are looking for short trades, trades headed down, and if it's bouncing off the bottom, we are looking for long trades, trades headed up. The second thing we look for is a close beyond the moving average line, then a close coming back, and finally a close beyond again. The last one is our entry. However, there are 2 other conditions that have to be met. The first is the third close above the open line for longs or below the open line for shorts. And the last condition is there enough space between the entry to the other end of the channel. It seems complicated right now, but once you get the hang of it, it's not that bad. You only have to look at the charts once every 5 minutes to see if there's an entry coming. Let's take a look at some examples. Here you have a bounce off the bottom of the channel, a close above the line, then below, then above again. It is above the open line for a long, and there is enough space for the trade to play out. However, this trade I would not have taken because there were no clear closes beyond the line. They are on the line. It has to be clear. This next one is better. It's bouncing off the bottom of the channel. You have clear closes beyond the line, back, and then beyond again. Much better trade. There's enough space. It's above the green line. Let's look for a few more examples. Here, there is no trade. Here it's bouncing off the top, but no trade because it's not below the line. Here also there is no trade because it's not below the open line. This one is a trade because at the entry candle, there was a bounce off the top of the channel. Now let's go ahead and get on with the back testing, and we'll pause on the tricky ones and discuss those if they're valid or not. These are the 8 pairs that we're going to back test, and spoiler alert, it's going to be pretty good. Let's start with the EU, the euro dollar. This one, there's not enough space at the bottom to get to the other end of the channel, so it's not a valid trade. This one is okay since there happens to be enough room to the other end of the channel. And by the way, we are doing 1-1 risk reward ratios on all of these trades. Backtesting this strategy on the EU for 1 month resulted in 5 trades, all winners. Let's move on to the GU, the pound dollar. The pound dollar ended up 9 winners and 4 losses. And let's move on. The US dollar Japanese yen pair had 8 winners and 3 losses. The US dollar Canadian dollar had a result of 8 wins and 4 losses. The Australian dollar-US dollar pair had a result of 12 wins and 3 losses. The US dollar-Swiss franc pair had a result of 7 winners and 4 losses. The euro-dollar-Japanese yen pair had a result of 7 wins and 5 losses. The pound dollar and Japanese yen pair was the worst performer, and it still broke even at 5 wins and 5 losses. This brings the total number of trades made in 1 month with the DC Open strategy to 89 trades, 61 of which were winners, 28 losses. That's 33 net wins for the month. If you're using a risk of 1%, that would be 33% gain for the month. At 2% risk, that's 66% gain for the month. At 3% risk, that's 99% gain for the month, doubling the account in 1 month. In another video, we'll look at trading stocks and futures using this same strategy, but for Forex, it works amazingly well. Take care.